Welcome to this week's 7X Investors Look Ahead. This is where we'll take a look at a currency pair, an index, or a commodity like gold or oil, and give you our outlooks of what we see coming this week. Before doing that, we'd like to share with you a little bit about 7X Investors. It's a platform where you can develop a free account and join our community. In that community, you can be able to have free trainings, which we hold every Wednesday. You can also gain knowledge from other traders that are in the 7X community or even in the other communities such as Alpha Trader or 7X Futures. As you attend the weekly trainings, you can be able to get a more in-depth understanding of what kind of trader you would like to become, whether it be in futures or in Forex or CFDs. Once you decide what you'd like to do, we have specialized trainers which will go through step by step on how to become a proficient, profitable trader. We have Cordell Stevens in the Alpha Trader section, which deals with trading CFDs or currencies. And we have Dan Kelly in 7X Futures, which trades futures in the NASDAQ, the S&P, and gold. At the end of this video, we encourage you to click the link below, which will take you to our website, and you can set up that free account. Also, subscribe, like, and turn on notifications of the site so that you can get notified every time we release our week ahead video. Now let's take a look on what's ahead. Hello traders, and welcome to this week's look ahead. Now, we didn't post last week, but if you remember, we were long in the NASDAQ a couple of weeks ago, and we're looking to see if this thing rolled over and pushed through. It did not, so we continued to stay long, adding to the trade, but we did take profit up here because we weren't sure if we're going to break through or not. Now we have broken through and we are positioning long once again this week. Our target for this week is going to be right up here, somewhere in the neighborhood of 15,786. So we are long the NASDAQ again on this pullback right here. Let me blow that up so you can see where we're long at. So we're long right here. We may come down a little bit more down here to 15,419. If we do, we're going to add to our position at that level, but we still have that target up here of about 15,700. Let's just call it somewhere up there, 15,765 to 15,784, somewhere up in there, but that's our target for this week. So I have two charts of Bitcoin here, two daily outlines. So we broke through this channel here, and we were thinking we'd come up here and pull back, but we broke through. We've been long this and gave our numbers a few weeks ago. We hit those numbers. We are out of Bitcoin right now because we're not sure what it's going to do. We're not sure if it's going to pull way back here like this right here, or it's just going to pull back like over here and break up another level. So here's what we're looking for in Bitcoin. If we break out, then we're looking for a level about 41,860. Okay, so that's if we break out. If we continue to roll over, obviously we're looking for a bottom in here around 29,267, somewhere in there. But yeah, Bitcoin's pulling back, but we do expect it to break through and head on up. So if it breaks through this week, pulls back, we're going to go long to that point of about 41.6 is what we're looking at next. 41.6, I believe that's it. Here is oil. We were short oil to about 80 to 78.50 or 79.50, and we did complete that trade, took profits on this, and so oil is done for now. We're going to stay flat oil until we see another trade set up, but a little long in the tooth here to the downside. Want to see some pullback in this if we want to take it short further. But trade completed in oil, very profitable trade. We got it coming down, we got it going up, we got it coming down again. So very profitable there in the oil trade. Gold is a little tougher to figure out. Now, we were concerned that we wouldn't get this pullback, but we are getting this pullback. And concerning rates and so forth, it's a little strange how rates and gold are correlating now. So that's what's kind of throwing me off a little bit. But we could turn here at this level. We could have a turnaround here to the upside where we're at now, or we could push down a little bit more, say down to this level of about 1914 and push off there. So currently I'm going to be looking for a 1914 level and see what it does there, if it gets down to there. And if I see a reversal at that level right in there, then I will take it back up to about where we're at now, or just a little higher at 1950, 1956 is where I'm going to look to trade gold to. Euro Aussie, we looked at this level right in here and we were looking at going long there, but just for a short period. It's gone a little further. I've exited that trade there and I'm looking at this level right there. Now, here's the deal. If we don't come back down and break this and head down, then if we break this level right in here, so that level sets at about 1.68367, we are going to take it long to this level right here of about 1.7045, maybe 450, but somewhere in there is where we're going to take it long to. Okay, so if we break this level, then that's what we're going to. Now we could pull back and then come up and break it. So really what we're looking for here is we're looking for a couple levels. So here we're looking for a break. Let me just draw a line here real quick. We're looking at a break at this level to go short. And that level sets at about 1.66534, somewhere in there. We're looking for a break and hold below that. And then I would think that we would roll over and go short. But again, if we pull back and we come up and we start to break this, we're going to get long this. And we're going to take it to about that 1.704085 level, somewhere up in there. That's the trade. But we got to wait for one of those two levels to break. So we did get some money on this coming up to the top side here, but took it off at this level right about in here. And the rest is pushed on without us, but we're going to stay positive here and see what happens. Again, I'm indifferent to whether this goes long or short, just looking to see what the market is telling me. Dollar, we were seeing if we would break up first before we broke down. It did not. It broke down first. Now it's a pullback, and we follow this line here, pullback, and then a move down. So we probably hit a lower level about 103.2, and then we start to climb back up. So that's what our outlook is on dollar, because we're looking at markets breaking out a little bullish, more bullish on markets, so would be a little bit more bearish on dollar. So things like euro dollar, pound dollar, those types of currency dollar pairs would be along this week. So the VIX we thought would push out. It did not push out. It pushed down. You never can tell about these things, but I really hope it doesn't come down to here, because I said it would never reach back down there for a long time. And here we are, sitting here at 14.81. It has gone as low as 14.2. The lows were set in at 12.67, and that was put in here back in September. Could we come back down? I said I did not think that was going to happen. Well, now I'm going to say, yeah, there's a possibility we could come back down. Pretty crazy, but it is what it is. So we just take what's given to us. I did not think this was going to come back down, folks. I really did not. But there's a few reasons why, and I'm going to explain them next in when we look at the 10-year. So this right here, we're going to, yeah, it could be in play. But again, we expect it to stay down and not go long yet. So we're going to wait for this rally to complete before we see the VIX come up here and break out finally. Next, we're going to look at rates here. We see that rates have dropped. Now, what's the reason behind this? Well, if we look at what the Fed did this month, and also employment numbers, and raising the rates where they're going to hold, and the employment numbers, their numbers that are coming out, employment numbers down, that's going to cause, because the narrative is with the Fed that the higher we raise rates, they use the Phillips curve for this, the higher we raise rates, the higher unemployment will get, meaning people will begin to lose jobs. People losing jobs mean there will be not as much money moving through the economy, meaning that inflation will be tampered. Well, everything what the Fed said at their meeting, what happened with the jobs numbers, everything led to rates going lower because of that. But now, Jay Powell is back in there in the dugout saying, hey, wait, hang on a sec. We're not finished yet. I know the numbers came in low and so, but we're not finished yet. Don't get too excited, market. Well, the market just ignores that because I already know that the Fed doesn't know what they're doing. So again, market is seeing deflation or the loss of jobs coming into play, meaning that prices should contract, or it meets the Fed's narrative that prices should contract. Now, we have to look at prices. We have to look at the PMIs, the CPIs, the ISMs, and so forth, and see, PMI and ISM looking more forward. We are looking at where things are, the desires of the consumer are at, and seeing how those look out on the latter end. We're also seeing a problem with the auctions. Okay, so Janet Yellen out there touting we're going to go out there and do all these auctions. Well, now they've tapered back because they've realized that the cost of this debt is getting way out there for them to cover. And so there's this battle between Treasury and the Fed, and the battle is lower rates so we can sell more of these bonds, but Fed is going, no, we want to keep rates right where they're at, or possibly even push them higher. And so where rates are setting right now makes it very expensive for the Treasury to pay on that debt. And with the amount of auctions, the amount of treasuries they want to sell, which I think is over $1 trillion, which is insane, but that's what they're trying to do. So they have backed off of that. That has also brought rates down. So we have a lot of workings in the background which are happening, which are bringing these rates down. And that's really what we need to look at here is rates going lower. So where do we think they'll go? Well, right now we could see rates drop as low as maybe this level right here. So we got 4.394 is kind of the level we're looking at there. So if we look at this, or they might scoot down here to 4.1. But again, we are keeping a close eye on rates. Again, we expect this week they had at least back down to 4.491, and possibly, like I said before, this level at 4.405. So something to keep an eye on, folks. Again, this is going to create, if these continue to go down, this is going to add more fuel to this market rally, okay? So just remember that, and we would see that rollover we just looked at in the dollar. If you want help with your trading, if you want to look at new ideas, new ways to trade this market, which are new and exciting, I would invite you to come join us and sign up on a free account at 7xinvestors.com. Just sign up and get in there, ask questions. We can give you some assistance. You can get a little bit of free training in there while you're making your decision on which mentorship you want to get involved in. And then once you do that, you can really move forward with your trading, learning how to become a profitable trader. So we hope to see you in there. Again, that's www.7xinvestors.com. Take care. Have a good week. Wish you the best luck in your trading, and we'll talk to you later.